This was a topic yesterday also when we were at the Goldman Sachs meeting when they asked the Vice Chair, Rob Kaplan, on what the thoughts are on 50-year mortgages as well as this portable mortgages. So Trump is considering portable mortgages. This is New York Post. Here's how it works. Federal Housing Agency Director Bill Pulte said the government agency is actively evaluating portable mortgages, which would allow homeowners to transfer their loan from their current home to a new home when they move. With portable mortgages, the homeowner would effectively be able to keep their existing interest rate and terms instead of paying off the loan and getting a new one. It's a strategy designed to inject movement into a stagnant housing market. Many homeowners would be buyers, have remained on the sidelines because they are reluctant to trade their sub 3% mortgage rates for today's loans hovering around 6.5%. Realtor.com senior economist Jimmy Kimmel told Fox Business that these types of mortgages aren't compatible with the architecture of U.S. mortgage finance, nor would they fix the broader affordability problems facing the housing market if they were. So the question is what? I have $1 million home, but I have $1 million home. I'm paying 3.5%. Now, if I want to go sell this, yes, I bought the house at $700,000. I will get $300,000 of equity out. So if I get the $300,000 equity out and I go buy a different house, I'm going to have to go from a 3.5 to 6.5. So I'm better off staying in this and not having to remove that 3.5 I have. This is a way of saying you can actually keep that interest rate and take that loan into a new house, sell your house and buy another one, and you won't lose that interest rate. But how do they do that, Jeff?
Yeah, how do you do that?
How do you do it?
The question is, I mean,
what bank is going to prove that?
You have a collateral swap. You have to look at what is this house going to be a collateral for the new loan? I mean, the logistics of that are pretty close to nightmarish.
The logistics to me would be, who's going to entertain that? Who's going to prove that? And if they did, of course,
how this is going to work. What they're going to say is the government's going to come in and say, we'll guarantee.
Oh.
We'll guarantee something about this to get banks to do it. We'll cover you in case you thought you had this one house that you lent against. Now the buyer swaps to another house. If there's any problem with that house, the second house that the mortgage ports to, we'll cover the difference. That's what's going to have to happen, and I think that's the exact the way that they're moving.
That would be a $1 trillion dollar though. I mean, it's not. And
I don't think it'll work, but I think that's what the government is aiming to do.
Okay, I take you back to 1982. And in 1982, the Garn-St. Germain Depository Institution Act. Rob will find it. I'm sure he will. And what happened is they sat there and they came to Congress and they said, hey, it's 1982. What were interest rates starting to do?
This is post-Carter.
Yep. The interest rates were in trouble. And so at that time, you could have an assumable loan. When you bought my house, Pat, you could assume my loan and its competitively low interest rate as long as Jeff, my friendly banker, said, oh, let me check out Pat. Yes, not only you determine the price yourself, but as long as he has the difference between the loan and that you have and the price, you guys do it. But you know what? He's a perfectly fine consumer to me. I will approve him to assume your loan. And you got my 5% loan or my 3.5% loan. And you were happy and you bought my house in 1982 until the entire financial sector ran to Congress and said, we need the Garn-St. Germain Depository Institution Act. You have to make it legal for us to call all mortgages to full payment upon sale or transfer. You have to make it legal for us to do that. Here's your act. You can do it. Great. And they all ran back. And guess what? Every mortgage in America had to be paid on sale of the house. It wasn't that way before 1982. And that way, the banks got to put the new prevailing interest rate on your house. And that's how it worked. And now they're looking to go back to that. And all the banks are going to say, no, we're not doing this. We're not doing this. Because the banks would have to manage money differently. If you had locked in fair and square for a 6% mortgage and the rates are at 9%, prime rate is up.
I want to show you something, though. Watch this. Rob, can you go to the poll you just ran? Just watch what the audience is saying. He ran a poll. The question is, are you in favor of Trump's administration plan of portable mortgages? Okay? Look what the audience is saying. 56% is saying yes, right? Meaning, most people I talk to, they don't know how it works. They don't even know how you're going to do it. But guess what they're for? Man, if you're going to do it, I'm for it. Allow me to keep my rate. allow me to keep my rate. To me, the sequencing of challenges you face with this is you have to go to the banks and say, guys, just transfer the rate to a new loan. What's the big deal? You already have the risk on there anyways. Just transfer it. No, I gave that rate 4 years ago. I don't want to do it to a new loan. The rates are now this. I'm losing money on that. Well, do it anyways. It's okay. Just do it anyways because you're better off having a client paying the mortgage instead of them defaulting on it, and it's going to create more activity. No. We don't want that. We're not even approving this, the highest rate of us rejecting applications.
But you gave it to grandma for 30 years.
Stay with me, Tom. Please. Let me just go through this flow real quick and then interrupt me. But no, we're lowering. We're rejecting 47% of people with mortgages today. We don't even want the application. And they're going to go, yeah, but you have to do it because people are not buying homes because they can't afford it. Yeah, but I have to stay in business. I understand you have to stay in business, but we got to find a way to make money, and then it's going to go to Jeff's thing, which the only solution is going to be what? Okay, listen, wink, wink, just do it. We'll give you the protection. We'll come and protect for this. You see where this is going? I mean,
we aren't even talking about the real problem here. Everybody talks about affordability. It's the number one political issue across the spectrum. It's the reason why that poll is like it is.
Yeah.
You cannot blame people for saying, I want this, because affordability is a problem. But what are we really saying when we say affordability? What we're saying is, when we went through the pandemic, prices rose much faster than incomes did. Housing prices rose much faster. Car prices rose much faster. People fell behind because of the pandemic and the lockdowns and the supply squeeze and prices going higher. That's what people are saying. What they're saying is, I don't have enough income. I don't have a job that pays me enough to pay for all these higher prices, whether it be houses, cars, or even food. We're going to talk about beef. We're not even talking about the major problem here, which is a macroeconomic problem of the Main Street labor recession. We don't have enough income to pay for the prices.
I said it. Now you said it.
Well, I like that term. I think it fits really well.
I'm not calling the market. I'm calling labor.
Me too. Macroeconomic fund. I don't care about the stock market.
Can you do me a favor, both of you guys? Explain this to the audience that's watching this right now, based on numbers, data, what you mean by it. So what is the difference between a labor recession? What's the difference between other types of consumer recession? What's the difference between other types of recessions that we have?
I don't think there's any real difference because to me, the macroeconomy has to be a labor economy. It's not if we're seeing labor market that is actually shedding jobs, which means it's no longer growing, it's no longer adding jobs, it's actually subtracting jobs because companies are cutting back. And why are they cutting back? Because they don't have enough profitability, there's not enough business coming in, generalized downturn. If you have an economy that's shedding jobs, it's in a recession. I don't care what you want to call it. I don't care if the NBER, which is the group of economists that get together and decide what is a recession, what isn't. We don't care what they say. This is, again, like I said, this is the reason why people are so pissed off and angry is because they fell farther behind after the pandemic. And with the labor market going into this recessionary condition, they're falling further and further behind. They're not even making up the ground that they lost several years ago. So people, this is what when they talk about affordability crisis, this is what we're talking about. It always goes back to the labor market, jobs, and incomes. There are not enough jobs. There's not enough income that's enough to pay for even just the price changes from several years ago, let alone any additional price changes that come about this year and moving forward. So, I mean, labor recession, that's a pretty descriptive term.
Okay, if you got big plans for 2026, I am telling you right now, I can't tell you how many conversations we're having about business planning. There's a reason why we went less than 22 hours to Dallas and come back, because we want to see exactly what's happening with 2026. We're planning for our family, for our businesses, ourselves. And if 2026 is a big year for you as well, I want you to watch this clip. Rob, can you go to the clip with the Jenga to show them what happens when it comes onto business plan and how all of these things are necessary? Go ahead, Rob.
Business is a lot like Jenga. Every piece matters. You need a vision. Do this carefully. You need capital. You definitely need capital. Let's put this here. Ooh, listen, hanging on one piece here, by the way. You need the right team. For sure.
This almost fell off, by the way.
You need sales. As good as this looks, if your foundation isn't built on a good business plan, you know what happens? The whole thing crumbles. If you have big plans for 2026, on December 12th, I'm hosting an event called the Business Planning Workshop, where all day we go through the 12 building blocks of writing an effective business plan. So this doesn't happen to you. If you haven't get registered, click on the link below. Let's spend an entire day together on December 12th. Looking forward to seeing you there.
Folks, click on the link below, get registered. You can watch it with your friends, family, and this is going to be people watching this from 100 plus countries, and you can find a way to just get registered at the lowest level, or you can find a way to be on the screen so everybody can see each other, and at the end we'll do a Q&A for 90 minutes. If you enjoyed this video, you want to watch more videos like this, click here, and if you want to watch the entire podcast, click here.